Freelance taxes, what every freelancer needs to know. Freelancing offers a lot of freedom, but also significant responsibility. That's especially true when tax time rolls around. If you earn $400 from a single employer as a freelancer, in many countries you're required to include this income in your annual tax return. Hiring a tax accountant can help your business save hundreds of dollars. And understanding what tax deductions you qualify for is key to saving money and avoiding tax audits. Running your own freelance business, of course, comes with a lot of freedom. It's exhilarating to set your own hours, be your own boss, and select your own clients, and decide which projects you want to pursue or pass on. In fact, about 57 million people, or 35% of the US workforce, perform freelance work, whether it's a temp situation, side gig, or long-term career path. However, freelancing comes with its share of challenges, from negotiating the fair price for your labor to worrying about where your next job will come from and even if it will come at all. One area many freelancers don't think much about is paying taxes. New freelancers, especially those who had traditional jobs with the company until recently, are accustomed to their employer automatically making deductions from their paychecks. However, the self-employed are responsible for staying on top of their tax obligations and figuring out what they owe and when they need to pay it on their own. For freelancers and independent contractors, tax time isn't just once a year, it's always on the horizon, and these tips can help you when tax season comes and also beyond. Number one, understand the basics about freelance taxes. As a freelancer, you may have exceptionally honed skills in your industry, but that does not mean you know the difference between FICA and IRA. So let's start by reviewing some tax basics as they relate to freelancers. All business owners, whether they are freelancers or big-time CEOs, need to have a basic understanding of accounting and taxes so they can make their money work for them. What is self-employment tax? If you earn $400 or more in a year as a freelancer from any single employer, the IRS considers you self-employed and requires you to file taxes as a business owner. In addition to the standard income taxes based on your tax bracket and filing status, you are also responsible for paying a self-employment tax of 15.3%, which represents the Social Security and Medicare taxes you would normally pay, as well as the half typically covered by a traditional employer. Some new solopreneurs and entrepreneurs are shocked when they hear about this self-employment tax. When you're working for a corporation, taxes like Medicare and Social Security are already deducted from a paycheck, but as an entrepreneur, you have to account for those on your own. What forms do you need to file? In lieu of the single W-2 forms you'd get annually as a traditional employee, freelancers receive a 1099 MISC form from every client who pays you $600 or more. You report your 1099 MSIC income on a Schedule C attachment to your tax return. When do you need to pay freelance taxes? Freelancers who expect to owe $1,000 or more in taxes are required to pay estimated taxes quarterly as well, because freelance income is not withheld by employers throughout the year. The IRS Form 1040-ES can help you estimate how much you will owe in taxes each quarter. It is important to get these payments as close to the real number as possible. If you underpay your quarterly taxes, you will owe the IRS the remaining balance when you file your annual tax return by April 15th. If you underpay your quarterly taxes too much, you may have to pay additional fines. Additionally, freelancers may have to pay state income taxes as well as local taxes. 2. Know your business structure. What type of structure is your business? LLC, S Corp, C Corp, sole proprietorship? The legal structure of your business not only affects your personal assets, it determines how much you owe in taxes. Freelancers typically file taxes as sole proprietors, which means they file a Schedule C form that integrates with their personal tax return. Once they reach a point where they are making thousands in net profit, they may want to look at filing as an S Corp. S Corp status is more complex but may offer some tax benefits. Sole proprietor is a great option, but your personal assets could be in jeopardy if you are sued. A corporation is much more complex and requires additional setup fees, but it protects your individual assets. Freelancers who form a corporation or LLC will pay unemployment tax, federal and state taxes, and half of the FICA tax, but they may be able to shield some of their money from the self-employment tax. 3. Consider hiring a tax professional. An accountant or CPA who is familiar with freelance taxes could be your best friend come tax time. If your income and filing status does not change much from year to year, you might be capable of doing your own taxes. But most people's financial situations change often. As your tax return gets more complicated, you might need help. Filing your own taxes means keeping track of all your receipts and statements and understanding what it all means. Every transaction matters, and if your financials are kind of a mess, then you're better off paying someone else to sort it out for you. Also, the IRS constantly updates its tax laws, and you may need help understanding how these changes impact you. 4. Understand how to estimate quarterly taxes. Freelancers who expect to owe at least $1,000 in taxes are required to pay estimated taxes quarterly. Refer to your prior year's tax return to gauge how much you should be paying quarterly. If this year is your first year as a freelancer, you may not be able to estimate your tax payments accurately. If you make a miscalculation by either underpaying or overpaying your estimated taxes, the IRS will issue a correction when you file your annual tax return. You will either be asked to pay for any missing taxes or issued a tax return for any excess amount you paid. The IRS wants to see that you have paid 90% of your taxes or the equivalent of 100% of last year's tax bill by December. Otherwise, you will have to pay an estimated tax penalty. The estimated tax due dates for 2021 are April 15th, June 15th, September 15th, and January 15th. If you don't pay your estimated quarterly taxes, you won't get a bill notification from the IRS, but you will have to pay a penalty when you file your taxes. The IRS provides tools such as the 1040 ES worksheet to help approximate your total income for the year and figure out how your estimated tax payment. If you're a married freelancer, you may have your spouse increase your withholding taxes to help defray your tax bill. The biggest thing is to speak to a tax professional before the year ends. That's crucial to getting your ducks in a row and making strategic decisions about deductions, withholdings, quarterly payments, and even investments that can help reduce your overall tax debt. 5. Think daily, not quarterly. Tax professionals advise self-employed workers to spend time each day focusing on tax-related information, which includes updating income and expenditures as they come in. When you keep on top of your financials, your records are more accurate and you aren't rushing around in panic the week before meeting your accountant. Freelancers can use QuickBooks or various accounting apps to do everything from tracking expenses to scanning receipts. I think the biggest thing to understand for freelancers is that even though they are freelancing, which tends to have the connotation that it's just a side gig to the IRS, it's still a business, so keeping accurate and detailed records is a key. 6. Declare all your business income. Freelancers should receive a 1099 MISC form by January 31st from any company that paid more than $600 for the tax year that just ended. However, whether or not you receive a 1099, you're responsible for reporting all your income, including any cash payments. If you're ever audited, you'll need to account for unreported or underreported income. Freelancers should also cross-reference their own accounting documents against the numbers on the 1099 form. Companies sometimes make mistakes, and you don't want to be on the hook for paying taxes on income that you did not earn or receive. Even if you cannot afford to pay your taxes, it's important to file accurately and on time. If you're in good standing, you may be able to tap into IRS taxpayer programs that can give you more time to pay. 7. Be prepared for tax day. It's important having a credit card just for the business and setting up a dedicated savings account to put aside a certain percentage of each paycheck for tax payments. By doing this, it makes it way easier for a freelancer to prepare their tax returns by helping them determine profit or loss. It also makes it easier to classify expenses when leveraging financial software. How much should you set aside? Financial professionals advise putting away about 30% of your total income to pay for taxes. In fact, you probably want to withhold closer to 35% if you have high income and you live in a high tax state. 8. Understand your deductibles before you file. Many freelancers leave valuable tax deductions and benefits on the table each April because they are not sure what they can and cannot deduct. In fact, 35% of freelancers have a hard time understanding and paying taxes, and 73% don't deduct any taxes at all, according to a report by Zero. A tax professional can help you identify tax deductions and credits and offer advice on how to lower your tax bills. It's best to talk with a tax accountant specializing in 1099 contractors because they can help you find deductions you didn't know you had and helping reduce your tax bill. Some common deductions for freelancers could be home office space, vehicle expenses, travel expenses, health insurance, etc. For example, if you work from home as a freelancer, you may be able to take advantage of the home office deduction. This allows you to write off expenses ranging from utilities to the rent for the space in your house that serves as your primary office. However, the area must be strictly for business purposes. So if you have a family room that doubles as your workspace when the kids are in school, it does not meet the criteria for this deduction. If you're on the fence between setting up an office at home or renting an outside space, so realize there are some tax perks with home offices. Auto expenses are another common tax deduction for freelancers. However, you need to keep detailed records of your actual expenses so you can compare standard mileage rate and actual vehicle expenses to see which one gets you the better tax deduction. And once you pick one of these methods for deducting your auto expenses, there are restrictions on switching to other methods. Health insurance premium is another area to consider. While most employees cannot deduct medical expenses, including insurance premiums, because the tax threshold is so high, self-employed business owners can treat insurance premiums as a business expense and use the cost to offset income. Health and dental insurance can be deducted as long as your spouse does not have an employer-sponsored health plan you are eligible to participate in. Additional expenses you may be able to deduct include education costs and certifications, advertising and marketing, office supplies, computer equipment, software, and web hosting fees. 9. Recognize you cannot deduct everything. On the other side of this issue is that some taxpayers put themselves at risk of an audit by trying to write off bogus expenses. For it to be deductible, it must be ordinary and necessary to run your business. And what does that mean? Think about a hairstylist and a real estate agent. The hairstylist might have expenses like shampoo, totally ordinary and necessary. However, if a real estate agent was trying to deduct shampoo, that would not go over well. It must be a normal expense in your industry for it to be tax deductible. Other expenditures that come into question are entertainment expenses, business meals, though 50% of the cost of these is usually covered in personal cell phones. Personal expenses are never tax deductible, and personal cell phones create a very gray area. If you want to deduct your cell phone, get a second phone specifically for business. You should carefully evaluate whether you want to hold your startup costs or you like to write off the first. It's also worth noting that many freelancers assume they can deduct all of their costs in starting a new business, but this cannot be done until they have their first sale. Even then, the costs are deducted over 15 years, but you can elect to deduct the first $5,000 in expenses the first year. And you should carefully evaluate whether you want to hold your startup costs or elect to write off the first $5,000 in the first year of business. 10. Don't expect a tax refund as a freelancer. There is not a person who does not love getting a tax refund. As a freelancer, though, you need to get used to the idea that you are not likely to see one. When you have an employer, taxes are automatically withheld from your paycheck and you may get a refund if you overpaid the government throughout the year. This is less likely to happen if you're self-employed since you're the one sitting in the money you owe. Freelancers receive refunds under only 2 circumstances. They overpaid their quarterly estimated tax payments, or they made such little money for the year that they are entitled to an earned income credit, EIC, which is refundable. In general, most freelancers that make a decent amount in a year do not qualify for an EIC tax credit. 11. Prioritize planning for retirement. For many freelancers, retirement planning is not a top priority, as they are laser focused on the day-to-day responsibilities of growing their business and reaching new clients. They may also feel they have few options since as sole proprietors they cannot tap into employee-sponsored retirement accounts. One of the biggest misconceptions freelancers have about retirement plans is that they are too costly, but a retirement plan often provides significant net after tax benefits. For a self-employed person or a business owner without any employees other than their spouse, a solo 401k plan can be a good option. This plan allows the same contribution as a traditional 401k profit sharing plan up to $56,000, $62,000 for those over age 50, or 100% of earned income, whichever is less. The money is tax deferred until withdrawal. A simplified employee pension IRA plan is another way to save for retirement. An SEP IRA allows you to contribute up to 25% of your net earnings, or $56,000, whichever is less. Traditional and Roth IRAs are among the simplest way to start saving for retirement as a freelancer. These are ideal for those just starting out, saving less than $6,000 a year, or looking to roll over 401k from a previous job. Withdrawals in retirement are tax-free, but regardless of which investment option you select, the most important thing is choosing a plan and getting started. With Social Security benefits falling short of meeting the income needs of retirees, freelancers must take action in order to secure their own retirement. The good news is that there are many retirement planning options they can leverage to help stash funds away for the future while also reducing significant tax liability.